Hello guys, I'm here to talk about swing trading with EMA 200. So let's look at a few stocks and we'll see how it goes. Uh, this is, if you see here, the stock price is above its 20-day moving average, far from the EMA 200. So this doesn't qualify for this video. Let's go to the next one. Let's go to this one, TVS Motors. Now, the stock is moved quite a bit away from EMA 200, so this will not qualify as EMA 200 trading. Let's go to Indus Towers. Now, Indus Towers, let's look at Indus Towers. We're looking at it on a daily time frame. And what we have here basically is that the stock has been falling down for quite a while. And now, for a few days, it's been able to, especially since the 27th of November, we see a bull candle here and it's managed to retain, but then it's again come back here. Now, if you see here, the price is basically below all its moving averages. You see, it's 350 rupees, right? 350 is below the EMA 9, it's below the EMA 20, it's below the EMA 50, and it's below the EMA 100. And let's come here. Let's look at this here. And if you see here, the price is closed above the EMA 200, and I'll just zoom here so that you can see the wick here. Now, what has happened is the price has been falling continuously, 3, 4, 5, 6. It's been falling for almost 6 trading sessions. Trading session being a day, so an entire week uh, and one more day. And finally, the bulls have basically shown that they are not willing to let the price go below. It did go with a down below the intraday spike, and but it managed to finish above. Now, if you look at if you- let's look at the prices, right? It opened at 342, went to a low of 335, went to a high of 351.20, and then closed at 320. So, the open and the low, there is obviously a big difference, but it has closed quite close to the highs. Now let's look at the 3 hourly charts. We look at the 3 hourly charts here. Let's discount this one, right? Because it's just a 15-minute candle. It means nothing. If you look here, the the bears try to push the price down, and then this you had this nice candle with 2% and a volume of 4.9 million, which is basically less than the 20-day average, but it's fine. At least you got a good moment here. And here also, if you look here, the close is very close to the high. Now let us switch back to the daily chart. So in such a case, and if you look at the EMI, if you I'm sorry, look at the RSI. RSI is basically about to cut the signal line, but is still in kind of bearish territory. So in such a case, can you basically uh, can you basically go for this trade? If you look at the Bollinger Bands here, it's kind of taken support also on the median of the Bollinger Bands and closed above. So the price definitely seems to be going upward. And should we basically go for this trade here? Now, uh, let me, yeah. So if you see here, basically, this is basically kind of, you can call it a piercing candle as well. You could enter here because, see, this is going to be a risky trade on many accounts. One, that the is going up and down here, and price has gone down below 200, went up, come down, taken breather. But if this works out, you could make a lot of money here. So, in such a case, let's say we go for Let's say we go for a long above the high here, and your stop loss will be somewhere, say a few bucks, half a percent below the low of this candle. It should not be the low, but just a little below the low of this candle. Now, for example, the high here is 351.20, and you have the low as 335. So, if you calculate, let's calculate 351.30 being your entry price, and your stop loss, say at 333, let's say 332. Just take it as a matter of fact. So basically, you are going in for a 5.5%, 5.5% this year, and you could take an entry here. Now, what is the problem with such an entry? The problem with such an entry is that the you have a lot of EMAs which are going to be acting as dynamic resistance. So you have this EMA here, the 20 EMA, then you have the 9 EMA, then you have this yellow EMA, right, which is the EMA 100, and then you have this, sorry, this is the 100 and this is the 50. So this could act as dynamic resistance. The price could break through, but you basically really don't know. So this is kind of going to be a little risky. Now, what can you do if you are a very conservative trader and you say, no, why will I take the risk? Why will I wait? The price may hit back or it may sideways and it may meander here for a while. Then what you can do basically is you can do something like this. Not take an entry here where I've suggested, and you do something like you wait, you wait for the price to break through this trend line, and if the candle is good, then if the price breaks through here and crosses this 50 also, then there is only one EMA. So that way you will obviate the risk of fighting against this and the candle going up. And if you still want to be safer, then you say that uh, there's been a bear candle here and bears are selling here. So basically, this is kind of like a resistance. So this basically is kind of like a resistance, and I am not going to be trading till price crosses above. So it's up to you whether how you want to go in. If you want, and if the price manages to break through here and break through here, and you enter here because this is a safe place, you are ultra conservative because there's so many stocks, right? Why should you take any risk? So if you enter here, you miss out on the price going from here to here. But the advantage is you may miss out the price, but there is a high chance that the price may come here, hit this trend line which I had not drawn earlier, but now may come back because the trend line will act as dynamic resistance. So will all the moving averages. So will this support zone. And why do I call, sorry, this resistance zone? Why am I calling this a resistance zone? Can you see the candle here? Can you see the pressure here? Can you see this VIX here? So there are some there is a likelihood that when the price comes here, price may be be hit down by the bear. So this is how you can use the EMA 200, but in a different kind of manner. Not just, because it's taken support, you enter here and you enjoy life. Look at the entire picture. See what's happening. see where the moving averages are, see where the RSI is, see what's been happening over the last couple of days, see how the structure is. If you zoom in on the chart, you see there's a double top here and prices gone down. Then you have prices trying to make a comeback, but basically it's gone for lower high and lower low. Again, a lower high, lower low. And now you have this, what appears to be a change of character, but you really don't know because you have resistance here. So, will I take a trade here? I would not. Unless if you really want to take a trade here and sort of be and take the risk, then you move your SL. See, this candle is 1.79%, right? So you take only that much risk. You go to the low. I mean, it'll be more than 1.79 because the difference between the high and the low is sort of like 16 bucks, right? 16 is 5%. So uh, you can basically uh, reduce that risk to 3%. Don't even go for the high-low thing. Reduce your risk to 2 to 3%, and then you can do. Now, is this some sort of gambling? It's a probability game, basically. I would not like to call it gambling because now you are playing on the risky side, so you are mitigating your risk and you go in with a small quantity. For example, if you have the financial capacity and the position sizing to take 100 numbers, please go with a minuscule quantity here. Say, go with 25% capacity. Go with only 25 numbers instead of 100. Instead of taking a low here and keeping some ATR or some buffer, just keep 2% or 3% stop loss. And you can go in here. If you are really desperate to go in, you want to capture that move up to here. Will I go in? I I find it very difficult to answer. But looking at all of this, looking at the trend line here, looking at resistance, I wouldn't go in. I would not even want to risk 1% because 1% is very subjective, right? So 1% of what? If you're trading with 1 lakh, it's 1,000. But what if you're trading with 1 CR? Then how much is 1%? I mean, I'm talking about the not the position size, about the risk, right? So don't go at 1% alone. Look at the amount also. I would not basically suggest here, but if there are people who are highly aggressive traders, so in spite of knowing that there's a trend line here, there's a resistance here, they'll say, "What the hell? I want to capture this moment." They'll go in. So it's up to you. So this is how you can do EMA trading. I've shown you 3 ways. I've shown you how the price is taking support here. I've shown you the different types of SL you could play around with. I've also shown you a trend line. I've also shown you the market structure. I've also shown you the resistance that form here. Now, up to you how you want to trade. If you really want to level up your trading, watching YouTube videos is a great help, but it's not going to make you a profitable trader. I basically am a mentor, a trader. I trade both intraday and swing. And if you're really interested in becoming a student of the market, then I invite you to join my course. I have a paid course. I have a free webinar where you are introduced to what you are going to get in the course and the way I teach. It's up to you. If you really want to level up your skills and make money in the market, you're not going to be able to do that by just watching a few YouTube videos, whether they are made by me or somebody else. What you need is mentorship, hand holding, because you'll have thousands of questions. And without mentoring and coaching, you're not going to get anywhere. You're just going to burn a hole in your pocket and probably waste thousands of rupees or lakhs before you realize that you need coaching. So if you're really interested, I'll put a link for my paid course in the description of this video. Thank you for watching and happy trading.